Hello, hello. Please let me know if you can hear me. We'll give another, we'll give it like 5-10 minutes for people to join, and then if any questions, just drop in the chat box. Hello there. Just let me know if you can hear me. I will start like in 5 minutes. Cool. Cool. I probably will start. If you have specific questions, drop them in the chat. If you have specific pairs you want you guys to want me to have a look and maybe give a read regarding the levels and stuff, just let me know. Yeah, we can do that. Maybe you can specify which specific tool you want to cover first, and so on. In the meantime, we've been, because of the daylight saving time, we had some issues with a few tools, few indicators. As you guys know, in States and Europe there is different times when the daylight saving is changing, and same time like for people who use it for crypto and for forex, there is well is specific different time calculation as well, and plus some forex brokers, they are using 7 day a week time calculation. So yeah, it's been a bit challenging, but like after few few days of coding, we finally managed to get basically all the timings that doesn't matter what time zone you are or what forex or crypto or stocks, whatever, or doesn't matter the daylight saving time. No, wherever you change whichever market, the always is gonna be exactly the time. So there will be no need of manual changing. At least so far we can see, like, this is like euro is like settings is the same. You can go like indices. NAS 100 is the settings will be the same. You can go whatever crypto. The settings will be the same. Slightly maybe this box will change just a shade, but the high-low will be the calculator perfectly. That shade will just slightly change just because of the daylight saving time, but that's just a coloring. Otherwise, like, we're really pleased because that will save us so much manual adjustments. It's just literally you change whichever market, stocks, whatever. The 3 boxes will always be exactly the same levels without any manual adjustment. So yeah, we really pleased with that one. Sounds multi-time frame solid. yeah, I think so. It's I think we how to say, not jumping a gun, but basically very, I'm not gonna say very advanced, because we think the like storylines are so basically simple. It just, I think that the reading them, the hardest part is probably to understand them, like, okay, what is exactly it is, what it displays. And that's definitely, I will suggest go over and over the guideline PDF and stuff. But I will say definitely in coming days we need to start to make guideline videos, because we, like, last few days been really busy with this daylight saving time, because we had so many requests that can it be adjusted, changed and stuff, and it just takes so much time. We're super happy that's fixed now. So next one we will definitely put effort to making explanation guidelines videos with each specific function of the concept. How to base trade with storylines breakout along with other tools. Alright, let's cover the market structure, liquidity, breakout stuff. So basically the easiest probably to just grasp it is, as we said before, you always need 2 reference points for context. So if you will be able to read it can be at 2 time frames, it will be the same, like, daily and 4 hour. So you need 2 points to make some kind of read some kind of context, so which direction market moves or whatever. So you need to learn that first, like, to be able to read 2 time frames together to transfer further to multi-time frame. So if somebody who is not familiar, like, reading multi-time frame, so it's no need for you to switch everything on. I will suggest definitely to just choose 1 time frame example, I don't know, any, because the market is fractal, so it will be the same principle. Let's take example like, I don't know, hourly perhaps. Like, let's put hourly liquidity and put hourly market structure storyline. What makes you different to Lux Algo? I'm familiar bits of few Lux Algo stuff. Coding wise, we code a bit different, like some like this, like the time boxes we calculate a bit differently, because we as well using timeless charts, which is tick chart. So our goal to whatever we calculate we code so it can be used as well for timeless charts, not candle charts, but as well like tick charts or anchor charts and so on and so on. Then looks I'm not really familiar with his stuff. I know he's have some few really good script publications and so on. Anyways, let's continue with liquidity. So I will definitely suggest you to just go choose one specific liquidity level you want, like I don't know, whatever, hourly. Apparently go small time frame so it's not so noisy with so many lines. So we mentioned regards the 3 stages, like stage 1, stage like let's cover maybe again like first simple basics. Regards the candles, like multi-time frame, key level, range indicator, that displays a specific single range of the current candle or previous candle, just depend on which time frame you use. So if we know that candle can go only 2 directions, up or down, and it's depend of what? It's depend of open price. If the price is above the open price, so it's up candle. If price is below open price, it's down candle. Till proven otherwise. What's mean till proven otherwise? Till if this comes back, reclaims and turns bullish, or we have a new candle which opens and it's flipped the box. This is bearish and now we are going bullish. So that's mean till proven otherwise, till your thesis is invalidated. So if you know candle can go either up or down, so how many ways candle can reverse? As again I said, you need to have 2 reference points for your whatever bias or direction or so on. So example here. So if example here, this is the first, what's that? The first up bar. So as we said, to reverse the market is most expensive part. As higher time frame, to reverse the opposite direction to market is most expensive part. So what is the most probable move after establishing first up bar? That market will keep pushing up till proven otherwise. What's meant till proven otherwise? Till we have again what? First down bar. If we have established first down bar, what's most likely continuation? That market will keep pushing down bars till proven otherwise. Now we have a again up bar, so and so on, so on. So basically then we say, okay, if regarding the 2 reference points, so if market has a down bar and we have up bar, and this is the reversal. So on reversal, price can either respect previous low and reverse, either it can stop hunt and reverse, or third version, it can just go through, retest it, and continue the market. So you literally have only 3 versions what reversal can do. Sorry, 2 versions what reversal can do. Third version is just market continues. So if we know there is only 2 versions what market can do, either stop hunt, sorry, not stop hunt, but like here, either respect the previous low and continue, or stop hunt previous low and continue. So if it stop hunts previous low, there's the peak formation, as we know, and goes. But if it respects, we know on this open price, that's time rotation. That's on small time frame. We look for, like, this is whatever. As an example, if this is daily candle. As the market is fractal, time frames are fractals irrelevant. So so I'm just covering that because the market structure is completely the same thing. Like here, on market structure we said, okay, there is first stage, second stage, third stage, like potentially, or potentially only 2 stages. So for bar reversal, for range reversal, like either this range in context with previous range, so we have down move. Most probable move is that we're gonna continue to move down. In this week, that's what we done, but we failed. So it's mean this is the previous range. So what is the most likely, if this open price holds, what's the most likely move? What's gonna happen? If we establish first up bar, this high is targeted instantly, and that's it. And you have again three basically stages, that you have a low, you have a open, and you have a high. So first stage is like you have peak formation, open is confirm that, sorry, this low, previous low, is the peak formation, which gives you confirm of the weakness that we are failing to go down. The open price in this scenario is the same as previous. In open price will be the second stage, and the third stage is that we took out the liquidity on the top. That will be third stage. So just to make a bit clearer, where the open is not the same as the low, let me give a better example maybe. Like that. So we have again, so we have basically first level, second level, and third level. So if we know we have a down bar, we are just looking at single time frame. We are not looking at multi time frames or whatever. Just how the candles move. Candle can move down, can move up. If it's established down move, most probable move is gonna continue the trend till proven otherwise on lower time frame. On higher time frame, that's single candle. So to easier read, it's from single candle, from single range. Instead, like you are looking small candles in low end and trying to, okay, what this, like, 20 small 1 minute candles does. Instead, you're just looking 20-minute candle, that kind of thing. So if you know we have down bar, and this should move lower because we established already down bar, so we're expecting to move lower. So if down bar established, what's need to do? It comes back, mitigates something, and continues. Target will be previous low, continuous target previous low, continuous target previous low. So from this open, that's down bar, it moves down. Goal is what? take out the previous low and continues down. It comes, it takes out previous low. What happens? It fails. It fails to move down lower. So it rejects from it. So we say, okay, we're gonna create the, because now when price comes above the, oh yeah, like in this scenario, like when price jumps above previous low, Jesus. So now when price comes above this previous low, on indicator you instantly will have what? Box, not box but like shade, which says, oh yeah, you have peak formation. So that's like your first weakness of downtrend. That's it gives you instantly knowledge what we failed to push lower than previous downbar's level. So we instantly make peak formation. So that's first stage. What's the next stage? What's the confirm for this to say, oh yeah, that's most likely is reversal, and that's most likely starting to establish up bar. That's what's open price. So open price is the second stage, which saying, okay, we took our previous range slash bar, time frame doesn't matter, it can be daily candle, monthly candle, 1 minute, doesn't matter, same principle in all time frames. So first stage, bang, we took the low, we failed, push lower, we failed, we create peak formation. Second stage, open price holds, okay, we most likely have a time rotation on this example if this is daily open. If this is daily open, we say, oh yeah, we took our previous day low, now daily open is holding, and you have like 4 hour or 1 hour open on top of daily open or 15 minutes, and it gives you bullish engulfments and pin bars. It's of course it's gonna reject you, so you already know, okay, yeah, second stage done because open is holding. So if you are already playing narrative, open is holding and the daily open is holding and daily candle most likely will expand daily range up, what's gonna target? Of course previous ranges high. So this is third stage. So completely same principle, how single ranges from key levels are flipping the books. The market structure does completely the same thing. So we're gonna now go and cover the market structure. Oh, sorry, just give a second. So but as remember, you have two options for reversal. Not always it's gonna come and stop hunt it. When it stop hunts, it gives you heads up, just because you have a, you know instantly whoever bought from here to up, their stop loss was here, so we're taken out of the market. Market come down, take them out, and bang, start to push them up. But not always. Sometimes they're gonna squeeze you out, come all the way down, and don't trigger it, because you know that's the smart money's, you know, hedge funds stops. So they'll say they will respect the low, they push down, respect the low, and then bang, push up, hold open, and bang. Then you literally have just two stages, because you have just, you know, open and then it just triggers. It's, you know, but then on you use another time frame, like, you know, example, I don't know, whatever. Let's take this example. Oh, 1 second, this line messing up. Come on. Okay, this one. So in this case, you know, that's the low, that's the open, and that's the high. So in this case, it's push lower, but what it instantly does is respects the low. But imagine if this is, you know, this low is like 4-hour low, and that's daily low. You have what? You have a multi-time frame order flow. Or this is like, you know, previous day, like, okay, this is example, whatever, Wednesday, this is Tuesday. So you have a low, low of the week. Oh jeez, I can't write. So you have no. So imagine you have low of the week and that's low of the day. But same principle, absolutely same. Market push down, it's puts in place low of the day, respecting yesterday, putting in place low of the week, and open hold. So what does it mean? It means weekly lows in place and no weekly range expansion is happening. So it's gonna target what? Previous day's high and blah blah blah. So now for market structure is the completely same thing. Just give me a second, let's quickly go through the questions. Please can you show how do you invalidates show us how you invalidate stolen bias. So first we should look for look for peak formation, then open, but how to use it. Yeah. So just now what I explained, that was regards the same concept of how I gonna explain in the second market structure, but the same principle how is the same principle as for key levels for the ranges. Just give you quickly example. If we just put daily previous day, and we don't need the Asia range for this. So the completely same thing. You have a like here today. This is the previous days, say, that's previous days low. Okay, that's this day. So yesterday we took out Tuesday's low. Open was not the best example because it's just so basically as is the same thing. As soon as you have peak formation for previous day, you say okay, can it flip and hold the open and then go after the previous day's high. In this case it didn't. It's from basically low push all the way up to open price. So you could probably look the same principle, like I don't know, on 1 hour or maybe 4 hour. So if you look 4 hour, maybe 1 hour. Yep. So let's say here, that's yesterday. Yeah. So this 1 hour low, which put in place low of the week, is the same thing. You have again stop on the previous bar, hourly open hold. In this case, took out previous bar's high, but as we know, that's low of the day. So if daily candle flips, if this low isn't put in place, it's gonna go up. What? Take the open and take previous high. This was late, so it's open new day opens. Today's low does what? Either comes down, because yesterday nope, it didn't close as the up bar, it was down bar. Yep, it was as down bar. So on hourly today, open instantly hold, low, as we know, if yesterday was down bar, so what market should do? push lower, just continue, or reverse. If it's reverse, it's gonna do what? Either stop hunt in reverse or respect in reverse. So low of the day respects low of the week. Yesterday we put low in place in low of the week, we put low of the day. What does the open does? Holds the open, goes up, takes out repeat this day's high. Again, 1, 2, 3 stages. As we see, weekly open prices holding, we have low of the week in place, we above the weekly open price just by single candle ranges. What does it mean? This means we have a weekly range expansion, because Monday high of the week open, put high of the week, came down, put low of the week, open is reclaimed. Where it's gonna go? Gonna go up till proven otherwise. What's mean till proven otherwise? What says you expecting weekly range to go up? Because we put in place low, we failed to go lower, and weekly's open price, weekly candle, weekly open hold, and we're pushing up. What does it mean? Look, absolutely the same thing what I just covered. What the weekly done? Weekly took out previous week's low, stage 1. Weekly's open is holding, stage 2. What is it going after? Always liquidity. There is nothing. Market goes only and after liquidity. That's the fuels the market. What's gave to fuel to reverse it? These liquidities. Whoever bought here in this week, all the stops was here, they come, trigger the stops, observe them as a buy orders, bang up. Your confirm, oh yeah, weekly time rotation. Weekly open is holding, nice. So most likely the stage 3 we pushing up to hit the high. To proven otherwise, what does it mean to proven otherwise? Till we have a new day and new open is holding, daily open is holding, to come down, target what? Weekly's open price. Because till proven otherwise, it's till weekly range / open price is bearish, and you say, oh no, weekly gonna go down. No, it's already established bullish. What? It's hardest to reverse the market. So now let's see for this one. So now I will just go through the same principle on the market structure. Because once you understand the principle regards the liquidity and how market moves, it's game over. It's just absolutely simple as that. So regards the market structure, is the same principle. So we switched on what? We switched on 1 hour liquidity, which is these dashed lines. So it gives us every single 1 hour structural high or low as a liquidity level. And then the last market structures breaks is this solid line, which is just this market structures break one. So if we take an example, so as we know, we have so basically each market structure storyline is the market structures shift or break of structure, or however it wants to call. We just call just breakout, because market what's gonna do is gonna consolidate, stop on one side, stop on another side, consolidate, stop on one side, stop on another side, and trend. So basically, if it does the break of structure, if it does the break, does it mean? It stop hunted one side, stop hunted another side, so it provides you the breakout of the structure, but that level is either gonna hold or fail. If it's fail, that's just a stop hunt. That's just especially one of the liquidities concepts is smart money traps. What's for smart money? What is the you know, chotch or market shifts. That's, oh yeah, confirm that our market is breaking, now it's gonna come back, mitigate and continue the trend because you know it breaks, but it doesn't. It's most of the time market just, you know, creates the breakout structure, but instantly fails. So failed breakout. So failed breakouts are one of the best setups. So again, on one single time frame, we let's cover the same principle. So okay, give me like better example for you guys to explain. Let's check another pair. It's gonna be the same kind of thing: stage 1, stage 2, stage 3, or stage 1, stage 2. Okay, I hope you guys can see clearly. Just want to give you a really nice example so you understand. Alright, this is perfect. Can you see, guys, these arrows? This short breakout to short side and breakout to long side? Just put in the comments how to confirm if it's failing on real time. Using the same concept, explaining for stop hunt peak formation both. Yeah, on this I will explain that on structure in just in a second. Yeah, all good. Alright, so remember regards the single candle. Single candle can reverse what? Stop hunting previous candle or respecting its level and holding the open to confirming market is reversing and targeting another candle's high, establishing up bar and expecting it's going to continue. Market structure is completely the same. So we have again, so this will be stage 1, stage 2, and stage 3. So 1 second. And 1 second. I'm back. Okay, so stage 1, same as for candles. So this is what? That's structural breakout to the short side. So short side breakout will be created when we breakout will be created when long side being stopped out and this line short side being stopped out. So now long side being stopped out, short side, as soon as short side stops out we have a short breakout. Jesus guys. Sorry guys, give me 1 second. Alright, sorry. So yeah, breakout is created when short breakout to short side, basically arrow pointing downwards, is created when upside liquidity be taken out, short liquidity be taken out, basically as your breakout structure, market shift or change of character. When one side is hit, another side is hit, and same principle. So if this short side breakout is true and it should hold, market should trend what? In bearish direction. So they hit longs, so they hit tops liquidity and fails. You instantly have a liquidity storyline there, which if it holds, yep, market should trend further to target what? Next liquidity. The market fails, so instantly given, okay, because last breakout was here, that was upwards, was pushing up for liquidity above. As soon it hits the liquidity and fails, it's gonna come down. To go down what? It's maybe gonna come and retest this high of the breakout from long side. So it's either can come down, retest it, and go higher, but it's failed. So now is the same principle. If you have a short side breakout, same as the down bar came down, stop hunted whatever liquidity from another side, so that's liquidity stage 1. So market should what? Continue structure, 1 hour structure, because this is 1 hour liquidity and structure of the black color. So it should what? Structure should go down. It gives a first weakness because it's took liquidity. There is next level of liquidity. It's never failed to go down. So it's reverse. That's the stage 1. Stage 2 is what? Failed breakout. When is the failed breakout? We established short breakout, but as soon it reclaims that's instantly is failed. Because here on this side, on this section, yeah, it's done the job. It's done, triggered the short breakout, retested the level, which is this structural level. It's went through, breakout, retest, trend continuation. Done what? Trend breakout, basically. It's breakout, retested, trended down. Targeted this liquidity, done the job. On this level, it gave the first weakness because it's failed to hold it and move lower. It's reclaimed. So if you're gonna turn on like 50-minute market structure, you will have a here already bullish breakout, long breakout on 50-minute. That's counter rounding. It can be maybe just pullback, come to test it the short breakout to go lower, or if this short breakout fails, that's what? That's your stage 2. Same as the what? Same as the open price. Sorry. Yeah, same as open price. This will be like your peak formation as on single candle. That will be like open price because what? You have a failed breakout, and if failed breakout, if price is going back above the failed breakout, what is the next stage? We hit the shorts. We are targeting the upside liquidity. What does it gonna create? It's gonna create long breakout. That's stage 3. As soon it hit the one side, hit another side, long breakout, it must to do what? Continue to go up to target next liquidity. It's failed, retested, failed, reclaimed, failed, move lower, consolidated, went up, created new liquidity, so basically consolidated, hit top side, so now as soon price is above this level, you will see the darkish green with arrow up. It's saying what? We are in long breakout above, and another arrow means price is above the long breakout. So whenever you have some kind of time rotation above the hourly structure, yep, you're going bullish. Because why? Because it's gonna go up, because it's hit the one side, make breakout, and it's gonna go in trend to target higher liquidity. Hope it makes clear. Once you go through like this on one single time frame, you can add another time frame, like let's say we just add 4 hour. So okay, this was not just hourly, but it was 4 hourly, so way stronger. But just example quickly. Okay, here. So we can see here. Look, so 4 hourly triggered short side breakout, bang, came back, retested. So 4 hour structure is bearish because it's first price is under the 4 hour. First we have a 4 hourly breakout on the short side. Market came down, took the liquidity, pulled back, retested the level, moved down. We have under this one we have not just 4 hour bearish breakout, but now we have as well hourly bearish breakout. So we have a inline market structure for 2 time frames. But from this level or this level, you instantly can say, okay, where's the liquidity on 15 minutes? 15 minute structure probably flip bearish breakout already here. So you can say, okay, 4 hours in line with 15 minute and price rejected from 4 hour structure level. So you're already bullish from there. And you will have your, hourly open price for time rotation. You will have whatever, some kind of high of the 4 hour or high of the day, whatever, to give you the place where to look for. And from here you see market just move down, whatever on the left side, maybe there is liquidity on 1 minute doesn't show. So like, okay, before we say, oh yeah, market done the short breakout and was consolidating coming up, because look what it done. 4 hour, it's failed to it's breakout on 4 hour, reclaim the level what it was going after. So this is 4 hour failed short side breakout. So if short side liquidity is hit, what's gonna go after? Long side liquidity. Bang. You see on this 4 hour, we have just level 1, stage 1, stage 2. Because if it's took out, because this is from here, like from that. So if market failed to go up, yep, it's gonna go another side to take another side liquidity. Took another side liquidity, hold it, continue bearish. If it's continue bearish, 4 hour structure, what should target? 4 hour liquidity, wherever is the next one. Failed, probably, hourly is there, but if we switch 50 minute, you definitely will have some 50 minute flip to bullish, which goes counter trend, which you say, okay, that could maybe just a pullback to test the 4 hour breakout on the short side. Yep, so we have a first push to the 15 minute up, rejected from 4-hour structure, bearish, pull down, took out this 15-minute structural low. If we switch on 15-minute liquidity, so you can see where basically this each structural line, structural storyline, it comes from liquidity, as you can see, like this, like this is as well 15-minute. It just doesn't show it because it's happened just in previous 15 minutes. Like here, it starts from here. It started from here. It just shows that. So it's pushed downwards. 15-minute bullish breakout failed. Target, if it fails, it's gonna go for another side of liquidity. Comes down, takes another side of liquidity. Fail breakout the short side. You will see how it's fails. Why? Because it's trapping everybody in it. Traps the breakouts, who longs or shorts the breakouts, or as you know, the smart money concepts. You know, you wait for your church, and then it should come, mitigate that church, and you know, go down, but it just blows through. It just builds the liquidity. That's this. It just builds liquidity. So now there is failed 15-minute breakout, putting some low in place. You want to see your, you know, hourly, 4-hourly open, holding, time rotation. You see this nice engulfment. So bang, comes back, retest it again, engulfment. Nice entry here, definitely. It's like, okay, how far is gonna go? Oh yeah, where is 15-minute liquidity? There. Oh yeah, I have a 4-hour structure. So you need to be careful because look, it's rejected once, I got rejected second times. You know, definitely get partial, you know, the move break even be up before that. But then you already playing here what? Not just 15-minute long breakout, but you're already playing 4-hour failed short side structure. So if it's 4-hour failed structure, 4-hour short failed breakout, where is gonna go? Where's the stage 1, stage 2, stage 3 on the up candle gonna go? Always for, if that's first up bar, first green day, whatever, it's gonna always go for that because there is no another direction. There is no another direction. It can go either down or either up. Simples. That's the simplicity. Like here's the completely same thing. It's respected this 4-hour structure, done the failed breakout to the short side. Where it's gonna go? Wherever is the liquidity on the top side. Bang. Took out, retested, on off you go. Came down, 4-hour, came down, make a short side breakout on 1 hour. Oh yeah, I'm bearish. You know, what does it mean? It means you can play 1 hour structural bearish side all the way up to 4-hour, because that's the next bigger structural level. It came down, what you have, but you always want to see, oh yeah, there's not just level, but there's liquidity. What you have a nice 50-minute, took down, take out all this 50-minute storyline, liquidity storyline flips what? Flips bullish because it's failed, it's took out the liquidity and it's failed to move lower. There is no liquidity all the way up to here. Structure makes 50-minute it holds on 4-hour bullish structure, so it's in 4-hour structure side, it's failed breakout short side, long side breakout, retest, and trending on 4-hour structure. You played 1 hour short side breakout, I'll wait here, you say okay, 4-hour holds, 15-minute bullish breakout, and off you go. And look at how much liquidity was here. Market consolidated, build all this liquidity, and just smoke through them. I hope it answers your question regards the storyline. Like I said, the easiest, just put single time frame on it. Put single time frame on it and just read it through. Because simplicity is that market gonna go up or down. Period. And if you have specific exact level which invalidates direction for that specific time frame, that's just beauty. That's just beauty. Like, look, liquidity taken out for our structure stage 1, fail breakout stage 2, liquidity to top stage 3. Fail breakout, a lower time frame you want to see, you have high, you have a time rotation, bearish engulfment pin bars. Alright, for our structure failing, we're gonna go down. Going down, targeting some kind of liquidity. We seen that like 50-minute or something, or hourly, what was that? How to confirm it's failing in real time? Yeah, just by liquidity. Just by liquidity. Because, by liquidity, by, key levels, specifically open prices. Like open price, high time frame open price is really strong, like crazy. Like, look, like all this move down, that's the yearly open price. Put the low of whatever, of quarterly or something here, and rejection. Up here you have what? 1 second. Quarterly open price. Quarterly open price, liquidity, high of the day, high of the week, open price. You want to see locally, structural breakout to one side, another side, liquidity is failing on, and stuff like that. I hope it explained. Hope it explained the storylines. Yeah, this liquidity storylines, it tells you bull bear. Probably gonna change, make maybe a bit simpler, or some kind of symbol or something. So I think it's might confuse like this one instead that one. Yeah, it's quite tough. We were discussing. We were thinking about the maybe we will create separate, single, like just single Dropbox where you can choose the time frame you want to backtest it or something. Because of the latest trading view updates where they're limiting how much memory you can have on charts on free accounts and most of the free accounts, and the code is very heavy. So yeah, on what I can suggest how to, because you're not gonna be able to see the lines way in history like here, just because it's there is limit how much lines you can see. One way to suggest is just use the bar replay to cut it, and then don't play it, but just manually review it, maybe that way. But we will think about maybe creating separate indicator with like basic liquidity functions or structure functions, maybe for one time frame, so there is a possibility to bar replay. Yeah, definitely. because on this stage of the, like I said, of latest staging, you update and how heavy is the code of the all the functions in it. It just doesn't work. It just shows you the, you know, you do the bar replay, and as soon you hit the, it doesn't load in yet. Yeah, it just gives you the memory std allocated memory error. Is the shame. It used to work before. Will we be able to change the color, for example, bullish making green? The problem is like change colors for like lines, because we done that on in dashboard on the table. So when it's you know, price is bullish breakout, it's like light green. When price is above the bullish breakout, it's darker green, and same for bearish. Why we don't use like red and green for, you know, bullish bearish on the lines or color coding? Just because it's way easier to understand. Okay, this is red, I know, oh, that's 4 hour, you know, and I like you have a blue, and I know that's daily. But then like how you gonna recognize? That's mean you will need extra labels or extra text, instead just saying, because like this is like whatever, like this is like 4 hour, yeah, now you know, oh yeah, that's 4 hour structure. But now if we change that red, and this will be green, and then hourly will be green, how you gonna see the difference? Oh, that's green is hourly, or that's green is 4 hour. That's mean you will instantly need extra labels saying 4 hour market structure, 1 hour market structure. And visually, like when you fully will utilize multi time frames, like having like, you know, 3, 4, 5 multi time frames, so you know the context. Okay, I'm breakout on 4 hour, I'm, you know, pull back on hourly, and oh yeah, I'm 15 minute on bullish, so I know, oh yeah, green color 4 hour color, and daily colors, or daily is bullish, 4 hours pullback, or 15 minute hourly put bullish, so daily and hourly is in line. Oh yeah, I'm looking for long. But then you have, oh yeah, it's green, or it's red, or it's green, and it's like, okay, what time frame is that? You don't have a clue, so you need to have labels for that, and then instantly will make your chart more messy, because you will hunt, you know, you have a lot of labels. And that's why it helps a lot that you have just a color. You instantly know what the time frame is. That's, oh yeah, that's daily, that's 4 hourly, black is hourly, and it's like, oh yeah, that's, you know, makes like easier. And same like, oh, dash lines, oh yeah, all dash lines is liquidity. Oh, solid line, oh okay, that's market structure for this one. And then for same for range key levels, you know, it's like, oh yeah, dash line, okay, that's midline. Okay, all dotted lines as all open prices, so it's instantly you see dotted line and this aqua color, oh yeah, I instantly know that's yearly open price. This is like, you know, purple, oh yeah, I know that's monthly. You know, that's instantly makes your decision, and like your this is like, oh yeah, that's yearly open price, I know instantly. Yeah, it makes total sense. Yep. Yeah, it's basically time frame color code. And if you, as I said, some of you maybe still don't know, but on each tool we have this info icons, which basically gives you all explanations for each terminology, and, you know, for each function. Like this one gives you color code, you know, what color is for what, and so on. Yeah, on multi-time frame range key levels, we really want to make as well like extra options in table, which gives you regarding the peak formations, or where are you in the range expansion, you know, like weekly, low, high, open price, you know, and stuff like that. We need to do a few more updates, but yeah, I've been distracted. We still working on that auto TA technical analysis, automatical technical analysis, you know, snapshot screenshots to the Discord as well. It's just been taking a bit more time with the servers and stuff, so but it's coming. Is there some PDF or something find and go through? Yeah, we have in educational section but in educational section we have a PDF for multi-frame range key levels and for market structures liquidities. And like I said, in coming week, definitely we will make a guideline videos regards as I explained, regarding the market structures storylines. Market structure storylines, like market structure liquidity storylines are, I don't know, for as I said, it's pretty straightforward. As like I think this stage 1, stage 2, stage 3 thing definitely explain, like, you know, I hope it's explained, because it's when we realize that, because first we, as you know, we started with the key levels, with the ranges, which is simply current range and previous range, because all what you need is open, high, low, only 3 levels. And when you confirm them between 2 reference points, previous candle / previous range, current range, you have instantly context what you need. What it's gonna do below here, either make a peak formation stop hunt or respect, and then open price just confirms, you know, if it's really reversing or not on that specific time range. And on the structure is this completely the same thing, because on the key levels, because key level ranges is just, you know, as I said, just single candle comparing with previous candle. What multiple candles that creates the structure. So liquidity structure, it instantly gives you the same view, because you want to, as we multiple times mentioned, our goal is to make simplicity, you know, as more simple, objective, when you know specific, as objective as you can, and you can't make it more objective than just single line. But it's not, you know, end of the day, if you draw just simple line on the screen, oh yeah, you'll find the reactions, but you need to have a meaning, like, you know, what's the reason that line is specific, that line is special. And, you know, back in, I don't know, a year ago, like 2 years ago, when I was in situation where, you know, start trading and blow all money up, and then I open just, or sometimes I still do, I open just empty chart, and you just look at it. And I will definitely suggest you, like, open the empty chart and just ask yourself simple question: where is the best opportunities to buy low and sell high? It's always gonna be what? Peaks, 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 peaks. The next questions for you, like, you know, 3 or questions, like where, you know, on the peaks. So then it's like, okay, what's so specific? What is so specific I need to see on each peak that can give me the first sign that market will reverse? And the answer is simple, that's liquidity. Because market, liquidity is like a fuel for the car. If you don't have liquidity, because for big banks, they need opposite side. What is opposite side? Retail stop losses. They need your stop losses for them to fill their positions so they can reverse. So that will be the first place. That's liquidity. And when they take the liquidity, what they need to put in place? Some kind of high or low. That will be high of the range, low of the range. And then your confirm is your stage 2, which is your open price. Locally, structurally, to confirming, yep, they are intentions to go another side, to go for what? Another side liquidity. Helps. Do we need to trade key levels concept with the market structure, or we can use one concept of this only? Yeah, you can use one concept only. As I explained you regards the single candle ranges, you can completely trade just by multi key levels, because the principle will be the same. You just gonna use, not like example, maybe this is daily range, structural range, like liquidity daily up and daily down. You're gonna just look like, okay, maybe weekly candles expansion. You're gonna basically create your narrative not on like saying, okay, weekly structural low been taken and failed, and then we're gonna go for, structural high of liquidity, but you're just saying, okay, we took out previous day's low, and that's been down bar, and if this is confirmed up bar, that open need to hold to go just take the previous bar out, because end of the day that will be like 2 daily candles, but that's probably will be, I don't know, like hourly or 4-hour structure. Why we transferred from, because first that's how we started with that's how you learn. Oh yeah, okay, what's the first sign that market reverse? It's need to establish first up bar or first down bar, period. There's no another way. Market candle can go either one direction or another. There's no middle directions. So if it's established first up bar or first down bar, the most obvious move will be up, continued direction. But then we transfer from ranges towards structure, because you get more stronger moves. You still can get strong moves like, yearly opens, monthly opens, quarterly opens. Like, look, if yearly, like just the simplest level to level trading, I'll show you. Just absolutely removing what I don't need this. So if you just leave open prices, and yeah, whatever, put this so you can see previous ones. And we go like hourly. Just simple level to level trading. So if yearly open holds, that's mean what? That yearly candle holds the open and most likely will reverse. So what is the first obstacle for yearly level? Is the quarterly. So basically for every single time frame, the first obstacle is one time frame lower, because that time frame, for yearly, quarterly is the one which can come back, and quarterly need to go bearish to endanger the yearly one, basically. So if yearly is holding, where's the quarterly open? It's up here. So you just simple can trade level to level. Quarterly fails, yearly. Quarterly fails, yearly. And so on. It's the same principle for 4-hour daily, 4-hour hourly, daily, and weekly open. The same principle. If daily open holds, that's what? That's potentially first daily up bar. Where it's gonna go? If daily flips bullish, what does it need to flip next one to go bullish higher? Weekly, of course. So from daily to weekly, fail, back daily, daily put what? Bearish, so you have a inline. Again, you have 2 time frames in same direction. Weekly is bearish, daily is bearish. So you looking to go what? Previous. So if this open holds bearish, you're going for previous bars low. Done. If it holds, you're going for weekly's open. And same ping pong thing. Level to level. Again, as I said, you need 2 time frames for context. In this case, weekly, daily. Weekly holds, daily holds. What's next? Monthly. Where's the monthly? Monthly, November. Oh, it's here. Oh, look. Daily is the same as monthly. So it's not just daily is bullish above the weekly. Monthly is bullish. What is the obstacle for monthly? Time frame higher. Either weekly, but we already obstacle for monthly is weekly. But next, invalidation can be quarterly, because quarterly is stronger than monthly. So look, reclaim monthly, push up quarterly, pull back. Nope. 4-hour flip bullish somewhere here probably, or hourly, and the same principle. You just look for more time frames. But same concept. First, I really gonna suggest to focus on 2 time frames, because then you have a reference point between 2 time frames, so you know, okay, if weekly is rejecting, what we gonna go to test next? Daily. If daily is holding, what we gonna go target? Weekly, because 5-minute can't flip, daily candle can't flip bullish if 4-hour candle is not bullish yet. Once you realize that, it's just, come on, it's game changer as far as your psychology works. Simple as apes would understand this. Exactly. Yeah. Simplicity kills. Like this kind of key level to level trading is just absolutely amazing. And once you can this multi-time frame order flow, that's even that's absolutely different level, you know. I hope it's explained, El Neil. How long we been in the call? Alright, I will need to wrap it up today. If still have any questions, just drop me question in the Discord, and we will cover. But yeah, some more stuff is coming. Still working on few things, but yeah, good stuff. Good stuff. Like, look at this day. Absolute nice. Remember this day. You have previous day, like you coming on market this day, you have previous day established what? High of the quarter. Obviously that's as well not a high of the quarter, high of the month and high of the week. So next day, if that yesterday was high of the week, today you have a high of the day. You have high of the day setup. What's confirmed? The open. So as soon you under the open price, you look for, you know, hourly, 4-hour, 15-minute time rotation, and you have instantly multi-time frame order flow. You have a high of the week, high of the month, high of the quarter, high of the day, daily open fails. What's gonna go after? Daily open, weekly open. Simple. Alright guys, thank you for the time and effort. Thanks man. I didn't see the PDF on the Discord channel. It's in members section on education, so alright guys, I need to finish. If any questions, drop me a message in the Discord. Thank you, bye.